The Doc's new investment option.
Lead Bullion.
Buy your ammunition from the Doc today at SDBullion.com.
When the Doc first envisioned SD Bullion, it consisted of providing consumers a product line of natural and organic medicinal and food options. First came colloidal silver, then came organic GMO-free survival food. Now comes the Doc's most complete medicinal option, Gold, organic, GMO-free, whole food vitamin line. Unlike products formulated using synthetic vitamins and minerals, which suffer from issues related to poor absorption, poor assimilation, non-compliance due to metallic medicinal aftertaste, and tend to produce side effects like nausea when taken on an empty stomach, the Doc's new multivitamin line uses 100% certified organic fruits, herbs, and vegetables. Presenting the Doc's vitamin line, Gold, safe, natural, wholesome, with no metallic taste, and better utilized by the body. Available within the Doc's medicine cabinet. There's a new type of gold in town, Gold. Get yours today, only at SDBullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is a special guest we've been wanting to have on the show for quite a while. He's a good friend, both personally and of SilverDoctors.com, a contributor to both SilverDoctors and the News Doctors, Prepper Jack, AGXIIK, or Silver 12,000. Craig, great to have you on the show.
Thank you, Doc. I'm glad to be here.
I know you're probably the most popular commentator on SD, so I know everybody who follows Silver Doctors closely would be excited to hear you here today.
Happy to contribute.
All right. Big week today again in the markets as well as the macro economy. And we had cartel stepping in to cap gold just under $13.50. Also silver right around that $22 level. Interestingly, gold still up slightly on the week, so another up week even after the big smash down Wednesday. So they weren't too successful as gold really held the $13.20 level, only about a $20 decline from the early week highs. And silver also was unable to penetrate 21 to the downside. Really 21.20 is held as pretty much a solid bottom throughout the second half of the week. So pretty decent action after a cartel hit, Eric.
Yep, and it's more of the managed retreat mode that we've been speaking about for weeks now. The cartel attempts to calm the markets when they can, and when momentum slows, they come in and do smashes like we saw yesterday, Thursday, February 26th, and not able to, at the same time, push it below key levels, like, for example, the 200-day moving average in silver has served as a trampoline 2 times in the last 2 days. So, you know, they're able to push the market down. They're able to keep the rise going forward at a managed rate, and that's what they fear most, because you have this overhang of the market of this kind of sword of Damocles of the interest rate derivative swaps in particular being the most dangerous, and by some estimations, we're talking about, you know, $500 trillion worth of this stuff in notional value. So a very small move that continues quickly day by day by day, as we saw a couple of weeks back in gold and silver. You know, that if that were to have continued, and we would have been talking of, you know, $23, $24 silver, what have you, gold being over 1,400, you know, a move like that in a period of say 4 weeks, 5 weeks could, you know, put some unusual stress to the financial system. So they're very fearful of those kind of things, and that's why instead of seeing a reversion to the mean and rising prices as you'd normally expect in any other kind of market, I mean, you can look at like coffee or, you know, some of the stuff in the agricultural sector in the last 2 months has been just nothing short of phenomenal. But you don't see that in the precious metals because we have this capping going on where the cartel's managing the upside. And that'll continue, but at the same time, we are going higher. You know, last week we were talking about gold, despite all of the volatility, making a small weekly advance, and that's exactly what we've seen. And silver kind of, for the most part, is trading sideways. So this is nothing to be considered negative. We have a very strong fundamental backdrop continuing, and the picture from from a technical point of view is also constructive for higher prices. So all of the hot money traders are going to be looking to enter the market on dips as opposed to selling it on declines and having downside momentum, which is where we were all throughout 2013. So it continues to be a completely different type of market.
And I'll agree we're seeing that already with customers at SD Bullion anyways. I wanted to give a quick update here before we get into the week's big stories and talk to Craig about that on the physical supply market here in the U.S. Really the only major change is that the U.S. Mint increased their allocation for dealers this week, I think from about 750,000 ounces a week. The last few weeks they've been doing up to about 1.25 million ounces, and that's eased the availability a bit. That's caused premiums to come down slightly. Still elevated from what we were seeing, say, a year or two ago, but it's helped the market a little bit for Silver Eagles, and not too much change across the rest of the market. So I want to get to Craig now. Probably one of the two biggest stories this week was the absolute collapse of Bitcoin. And I know this is something that's near and dear to your heart, Craig, and you've been ranting on the risks of Bitcoin over the last really 6 to 12 months as everybody jumped on board the train and rode the rocket higher, and the mania up that saw Bitcoin go from, I think, $9 or $10 per Bitcoin up to over 1,000. I want to say it was 11 or 1,200 was the peak a month or two ago. And
yep.
With this morning here on Friday, Mt.Gox officially declared bankruptcy. I want to say it was almost $500 million dollars in Bitcoins are supposedly lost, vaporized. I'm not sure if you can rehypothecate Bitcoins, but they're vanished. And Bitcoin is down pretty hard. And some of the other exchanges like Bitstamp, it's still around 600, but the Mt.Gox exchange is down to around 100 today, so less than 10% of recent levels. So, Craig, what's your thoughts on the developments in Bitcoin?
Well, I was watching Mt.Gox implode over the last several days, and the difference between their price versus the market price of Bitcoin told me that there was something very, very devious going on there. I don't know if Karpellis intended to have this thing blow up, or he was just inept, or something else along that line. But when I saw this come down, a couple of thoughts came to my mind, and sovereign economists and will not be a slave but good educators to me about the deep state. I was thinking Mt.Gox perhaps was a setup, Bitcoin perhaps a setup created by others, CIA and others, as a COINTELPRO for the digital currency advocates. It was just a sort of a seductive honey trap, and it led people in who did not want to be in the fiat currency, did not want to be in gold and silver or other assets, and preferred to move quietly on and offshore. But it has all of the issues that any type of trading system, including if you make a large capital gain, the IRS is going to want to know about this. You've got the FBI looking into it. They hold a good position in Bitcoin, so how they're going to be responding to this collapse, they probably don't care. They spend money on all kinds of things. When I looked at the major stories, carry trade in China, Argentina, Venezuela, war in Ukraine, I thought to myself, it sounds like Mt.Gox is going to be a distraction for several weeks. It's going to be running the news quite heavily. We're going to be focused on that when there's a lot of other things out there can be focused on. I also thought about the autopsy of Mt.Gox when it's dissected by the lawyers. I would call Mt.Gox the Detroit of digital currency. And as they pull this apart, it's going to be a Harvard MBA study case for years. But as they pull it apart, they're going to be able to find out how to chase down all of the other alternative currency systems. I don't think it may or may not be allowed to survive, but if it was created years ago by the powers that be and their deep state intelligence agents, then it perhaps might not be safe for a person's financial health. I could be wrong, but we'll see. Time will tell.
If the FBI's confiscated hoard of what was it, the Dread Pirate site with all the drug money, it'd be kind of humorous if their Bitcoin stash was stored at Mt.Gox.
I was thinking the same thing.
And then the other, kind of piggybacking on Craig pointing out one of the probably bigger stories geopolitically, obviously, in the week is the crisis in Ukraine and Russia, and really that whole section of the world teetering on what could quickly become at least a regional war. The big news today, early this morning, Ukraine imposed capital controls and began restricting foreign currency withdrawals from the country. We have Russia really moving all of their armed forces around and basically getting ready. Report late this afternoon here that Ukraine's acting president is even claiming that Russia has begun the invasion of Ukraine. What are your guys' thoughts on Ukraine and what's likely to happen in the next week or two? It sure appears to be escalating quickly.
It's very volatile, and it's important to point out that this is kind of a mini version of the Cold War, because the United States was backing the far right, sometimes even sons and grandsons of the Nazi sympathizers within Ukraine, and on the other side, the Russians were more in the pocket of the government that was there up and running, and that's not hyperbole. The fact that the United States was sending money to these protesters has been very well documented at this point, so it's not some kind of conspiracy theory. It was one of these colored revolutions that the United States had hoped to foment in order to destabilize Ukraine, and hope to, in fact, have a government installed that would be more sympathetic to European and United States interests. But that isn't unfolding very smoothly at this point, and there's a lot of division within the country. You have basically one half thereabouts that are sympathetic to Russians, and the other half being somewhat more interested in turning westward and towards the European Union. And it's the makings for a civil war that could turn into a regional war, just as you described. And hopefully it's not going to spin out of control that drastically, but it can. And if it does, it's going to create instability throughout much of Europe, and in fact Russia as well too. And then Russia is really interested in the Crimea in particular, and they're very active in the last week. There's these reports of people who were Russian sympathizers, or maybe even part of a covert operation directed by Russia, where they were taking over the regional parliament and raising the Russian flag, and Russian-speaking armed men taking over 2 airports, and the Russian fleet is stationed there because it's the warm water port in the Black Sea. So all of this is kind of a tinderbox. It's a little disconcerting to see this kind of stuff, and the ramifications to financial markets as well too is pretty profound. So it definitely needs to be on the top of everybody's radar, because this is conceivably more than just a single black swan. You can get a flock flying out of here.
Craig, what's your take on the capital controls being implemented by Ukraine?
Well, Ukraine was having problems well before this. I know there was runs on banks, and the Ukrainian currency was dropping against the dollar. The Russian banks had some runs on them as well, and the ruble is down. Been reading up on that. So I see Putin being put in a bit of a box. Now, he did win in the Syrian conflict here without us going to war, but the Ukraine is such a vital territory with their oil pipelines, and Putin can squeeze down those pipelines to prevent the oil or the petroleum, natural gas going to Europe. That's been a power play of his over the last several years. Now, if Exxon and Chevron are able to frack and produce good production of wells in Poland and Romania, and they've got about 5 or 6 million acres under lease to do that, they may actually be the means to replace Putin's oil hegemony into Europe. That means that Putin's people are going to be pretty distressed, since that's a major source of currency. His handlers are no doubt breathing down his neck to get something done here, and I think his natural reaction is to go to conflict, very hard, pushing back on these actions. If the Ukraine continues to have systemic failures, and we don't provide enough money to fix the bridge the gap, and Putin will not put enough money in there because he doesn't want to put more sunk cost in Ukraine, it may become a battleground. And the Crimea is a critical part of the territory. That's more Russian, I understand, than pretty much any part of Ukraine. But I'm very worried about this. I see this being a stare-down contest when we're going in, kicking over things in there with Soros and Newland and bragging about $5 billion rotated into Ukraine to destabilize it. That's Russian heartland. That's history. And I don't see Putin backing down at all. And I think he's got the teeth to do it. If he's backed in the corner, he'd be a dangerous man.
With you there. And as far as the capital controls, for what I've recall from the report, I believe they're restricted to about the equivalent of $1,500 a day that they're able to withdraw from an account. So it's kind of reminiscent of the Cyprus situation outside of the military conflict as well from early 2013. I wanted to move on here and kind of discuss one of the other big stories of the week, at least regarding the precious metals market. And before I want to get into that, I wanted to read a quote here that is attributed to Gandhi. And the quote is, "First they ignore you, then they laugh at you, then they attack you, and then you win." And that quote attributed to Gandhi is really what we've witnessed in the gold market and the financial media over the last 10 years, where originally proponents of market manipulation in gold and silver, whether it be GATA or others in the alternative media, were just completely ignored. And then they began to be ridiculed, whether it was on CNBC, Fox Business, Wall Street Journal. Basically, anyone of any stature in finance had to completely ignore the story because of the ridicule that would be directed at them. Also then kind of morphed into attacks. But here this morning, I guess it was overnight, Bloomberg released the article. Bloomberg released an article titled, "Gold Fix Study Shows Signs of a Decade of Bank Manipulation." And the article is basically covers a story or a study that was over a decade long, studying the banks involved in the London fix, and concluded that those banks, which include Barclays, Deutsche Bank, the Bank of Nova Scotia, HSBC, and the French bank SocGen, that they were actively working together to manipulate the benchmark. And while that comes as really no news, it's a yawn for listeners and SilverDoctors and all of us here, this is on Bloomberg, and Bloomberg is informing the mainstream audience that major cartel bullion banks may have been actively working together to manipulate the benchmark and applying to the London fix. And I want to read a direct quote from the article here. "The structure of the benchmark is certainly conducive to collusion and manipulation, and the empirical data are consistent with price artificiality. It is likely that cooperation between participants may be occurring." And to me, it's pretty shocking to have that kind of language being posted front and center on Bloomberg. What's your thoughts, Craig?
Well, the PN markets have almost been buried this week. We haven't heard a lot about them, and with the Financial Times burying the gold manipulation story, the old saying is, when things get serious, lie. There's a lot of troublesome events going on around the world, which are driving the news cycle, and the alternative news is driving the news cycle. I tell Eric in a moment about the Fox News about disclosure of the USS Reagan, and the radiation scare finally has hit the mainstream. Gold and silver got spanked and sent back to their rooms here earlier this week, and I think they are almost put on hold for right now with everything else going on. But I look at currency wars and oil wars creating a lot of action in gold and silver. It's the safe haven insurance policy that people need in times of stress. So currency wars and oil wars are hot and fast right now, and it's everywhere. There is no safe haven except for gold and silver. So it's going to be shoved out of sight, out of mind. Nobody in the powers that be wants to have people thinking, oh, let's find a safe haven. Well, gold and silver are it. stock market's still ridiculous, and bonds likewise. Bitcoin's had its ups and downs. So nobody's going to be waving the flag for precious metals in this time of distress.
Well, that's definitely true. It's nothing new. But the interesting thing about this Bloomberg story is that it suggests that the level of manipulation that's gone on for as long as it has gotten to the point where the powers that be are having a difficult time dealing with continued suppression of the story. And, you know, it isn't necessary for Bloomberg to look fondly upon this. Well, I should back up a step. The New York University School, Stern of School business professor Rosa Abrantes Metz and her husband Albert Metz are the author, and he, by the way, is a managing director at Moody's Investor Services. So it wasn't directly out of Moody's, but it's kind of got that imprimatur of somebody who's got some seriousness to it. And these couple of researchers did a report that basically helped unearth a lot of the LIBOR manipulation story 2+ years ago and sent the regulators off to an investigation a little bit more concertedly than what they would have done previous to the academics kicking them in the butt. And so it's interesting that this comes out now because basically you've had the backdrop of Germany not getting their gold and even the public in Germany beginning to wake up and demand regulators do something. So there is kind of a sea change under the carpet where, for one, the cartel in the form of the Fed and the Treasury are no longer able to move very easily with leased gold because basically they've either leased everything out already or they've literally sold the stuff out from under, such that, as an example, Germany can't even receive more than their paltry sum of 5,000 metric tons of gold last year for delivery against a promise of 35 to 40 metric tons or so. So, you know, there's an indication that this kind of backdrop is such that people are asking more questions now because of the ever-present and ever-growing substantiation of these claims that GoDT and other organizations have championed now for 15 years. There's been so much smoke that people are now willing to ask, is there a fire? That's the take-home point with this Bloomberg story. It's really interesting that the mainstream has actually taken this kind of stuff seriously. Earlier in the morning, I was thinking of dredging up all of the previous emails I've sent to reporters at Bloomberg over the last 10 years saying, hey, you know, you should look at this, you should look at that, you should re-examine this particular story just released by GoDT, et cetera, and contacting these reporters and saying, gee, now you're running a story about gold manipulation? It's astounding that it's taken this long for people to take it seriously. But here you have an example of two investigators in academia and one having one foot in the regulatory world, or not the regulatory world, but the, you know, Moody's being considered part of the establishment. These folks are speaking out, and now, you know, Bloomberg feels free to report it because it's not coming from GoDT. You know, it's a sad state of affairs, but at the same time, it speaks to the mainstream probably trying to some extent, warn people in the general finance community that, yes, indeed, we are getting at the latter stages of this price suppression, and because of that, as it unravels, they're trying to send a message to the conventional banking world that you need to start paying attention to this because we're in the end game. And I think that interpretation of what greater mainstream coverage of the gold manipulation scheme is the take-home point from all of this.
No need for the MSM to cover it unless, one, either the story reaches critical mass, which you can make an argument that it has, that you're just proven totally irrelevant if you don't acknowledge it and cover it, or the fact that the game can be continued indefinitely longer, and we are nearing the end game based on the complete lack of physical left in the market. I know there's been some recent claims that the U.S. is actually turning on the Saudis, and that the Royal Saudi gold, their allocated counts are being raided in London. All their the Saudi royal gold that was held on deposit and supposedly allocated accounts is being raided. And that's, if that is in fact the case, that's reaching the end of the barrel when you're resorting to stealing the gold of your supposed friends.
Excellent points. I think it's all of the above.
I wonder if they, as Willie calls them, the neo-Nazis, have any loyalties, whether it's the Saudis over the last 40 years or anybody else in their quest for worldwide domination. Eric, you brought up a good point here, and I was scratching my head to wonder, would the bank manipulation of gold or silver prices higher in order to create those big commission bases and bonuses, if these people would pile into the precious metals, if there was money to be made, serious money to be made on the upside, and if they would break with the U.S. government and other entities and run their banks and their books based on their own self-interest, they'll take the hindmost. Would they be lemmings running over the cliff to run metals higher? And how would that affect the relationship with the political powers that be?
I've always believed that will be the case. I know that Jim Sinclair has stated for a long time, those who have read him for over a decade, probably 5-10 years ago, he was stating that the people who make the most money in the great secular gold bull market are going to be the bullion banks who flip and go massively long, and that there is going to be a lot more money to be made manipulating the price to the upside once that day comes and they flip that switch.
Yeah, or just not manipulating to the downside and letting it float upward and benefiting as the ride goes up. I mean, Ted Butler's been talking about J.P. Morgan having a corner on silver to the point of 60% of the market, but it's simultaneous to all of that, and that would obviously position them well to benefit as the market moves higher. But simultaneous to all that, they're obviously continuing to cap silver, because as we can see, even in the last 2 days, silver was pushed down as a leading edge weapon to try to contain the rise in gold. You could see that in the relative price action of the week. So, we still have the managed retreat mode, and then maybe at some point, whether it's by a overnight or over weekend style reversion to some higher price to deal with debts that have gone bad, or just, letting the market move higher in a managed retreat mode over the course of a couple of months. There probably will come a time when the J.P. Morgans of the world and other bullion banks will be able to just ring the cash register and benefit from prices going higher. But it's really, 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 really important to keep in mind that the benefits that they gain from any precious metals appreciation are kind of small in comparison to the amount of benefit that they've been able to accrue over the last decade by participation in the overall edifice of the financialization and concentration of the banking system worldwide, and the fiat edifice that is up and running in all of these various other markets. Their participation in the bond market, and on and on and on, has generated far more profits than any kind of loss or opportunity loss that they'd have with rising silver and gold prices. Their bread and butter is more found on playing the role proscribed for them when it comes to being the Fed's bank, as some people nickname JPM. So,
well, I want to end on a humorous note here. I know we're already kind of running long, but Craig had the opportunity over the past week here to train or uptrain some of our nation's finest in their firearm skills, and I'll let you take it from there, Craig.
Some of you know that I've been doing some training with my instructor and learning some of the finer arts of firearm instruction to individuals, and I had an opportunity to work with him for 2 days training private security guards. So these are people who guard the federal courthouses, IRS, state buildings, and so forth. And it was an eye-opener, I have to say, because I've always trained with the best, and we do not have any room for lax discipline or gun management skills. What I noticed was the people that were involved in the training, we went through about 27 people. First of all, they were inept. I have to say, they were frighteningly poor in their skills. These are people that carry guns all day long. They're on guard. They wear full body armor. and they're carrying some of the better weapons and some of the best ammo I have ever seen. I've never seen what they were using, burning through probably $1 a round Winchester Ranger cop ammo, 40 grain, or the 40 caliber. This is, I was thinking maybe some of that stuff that the DHS and Homeland Security were buying in the billions of rounds last year, and they were running through it. What really I saw very clearly was the training on the federal side, which was partly overseen by a DHS individual. The trainer was inconsistent. He's been doing this for a while. His instruction systems left people wandering around, guns in hand, looking at the moon and wondering which way to shoot. I actually, we both got behind a truck the first couple of hours of the first day of training, wondering who was going to fire the first round towards the rear of the training facility. It was a little bit of a concern, but we were watching, as my trainer loves to say, people that look like a one-legged monkey standing in a hammock trying to have sex with bagpipes. Not pretty. Instructing these people, and I took over as instructor on the second day, it was difficult to get through to them. They just couldn't take the most simple instructions. And I'm not sure why, because some of them were former law enforcement, some of them were former military. To tell somebody, take 2 magazines, put 3 rounds in it, we're going to do a ragged hole drill, or we're going to be putting 6 rounds in 2 targets with an untimed drill, they were having trouble figuring that out. The unsafe handling of the firearm on a safe course, without pressure, was surprising. They were given some very bad instructions from other people and bringing it to the range. Now, these people have to requalify every 6 months to keep their job. It's a good union job. You get $25 an hour. The company that they work for probably bills the various federal and state agencies $100 an hour. So I saw about $25,000 worth of time and ammo and training expended in what was not an improvement to their skills, just requalifying. And I don't think any of them walked away with a greater set of skills than they did when they came to the training. Matter of fact, only maybe 2 out of the 27 would be somebody that my instructor would like to have come over and take a few hours of specific training. The folks looked like they were pretty infirm. Some of them were heavily overweight. It's a boring, stressful job, well paid, but they were not physically mobile, even in the simplest drills. It was a real eye-opener. But the ammo they were using, I'd love to have a whole bunch of that in my armory, but I don't even think you can buy that as a civilian. It's a seriously ugly-looking round in an exploded view. So I hope to do this again, because I do get paid for my training, but watching these folks go through their paces was a real eye-opener into how the other half trains even in a job that requires carrying a gun during your work hours.
Our nation's finest, right?
Well, maybe not finest. I'd love to be able to get some of these people under our wing and give them some serious training. But remember, these are people that, well, if you're like me, we might be looking at them on the other side. I did ask my instructor, are these people assigned to extra duties should things get a little restive in the streets? And he said, no, not to the best of his knowledge. They'll bring in the blue helmet troops for that.
All right. Well, I know we've wanted to have you on the show for quite a while, Craig. Again, one of the most popular and fun contributors and commenters on SilverDoctors.com is AGXIIK, and he also contributes to thenewsdoctors.com as Prepper Jack with his expertise on the guns and firearms. So, Craig, great to have you on the show.
Thanks, Doc Eric. Pleasure as always.
Thanks for being here.
We'll do it again soon, Craig. So for the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.
The Doc's new investment option.
Lead Bullion.
Buy your ammunition from the Doc today at sdbullion.com.